Welcome to the MegaCorp Market Pulse Recap for the week of May 4th, 2026.
Glad to be here.
Okay, let's unpack this because, well, our mission today for this deep dive is tackling this massive, honestly unprecedented gap between cratering capacity and just sharply spiking prices. I mean, imagine playing musical chairs, right? But the music stops, half the chairs vanish, and the remaining ones suddenly cost like 60% more to sit in. It is an environment where carrier selectivity completely dictates your operational success.
Yeah, that gap is, it's actually the largest delta we have ever tracked. It is less like musical chairs and, more like a high-stakes auction where the carriers are the ones holding the gavel.
Right.
Because routing guides are incredibly shallow right now. Primary carriers are just rejecting loads, which then forces that freight into the spot market way faster than usual.
And since they have their pick of the board, I imagine anything tendered inside that, 24 to 48-hour window carries a lot of risk, right?
Yeah. Oh, severe rejection and recovery risk. They they ignore late tenders entirely at this point.
Well, you have to push back on that a bit. I mean, the operational takeaway is to extend lead times to 3 to 5 days immediately. But let's be real, a lot of manufacturing floors don't even know exactly what is coming off the line in 5 days. So how do you pre-book without, paying for dead trucks you might end up not even needing?
Well, it is not really about booking a phantom truck. It is about securing your backup routing before the clock ticks down. You just cannot let loads enter that critical 48-hour window without confirming your secondary coverage.
Right, because if you toss a carrier a load with 24 hours of notice right now, they aren't just ignoring it.
Exactly. They are actively penalizing you for it.
Everyone is panicking about capacity, but here's where it gets really interesting. The actual cost of keeping those trucks moving is quietly dictating all of this carrier selectivity. I mean, diesel just topped $5 a gallon on the West Coast. That is a 40% spike from pre-war levels.
Yeah, and if we connect this to the bigger picture, those higher operating costs mean carriers simply cannot afford to sit idle. Time is literally fuel money for them right now.
Oh, for sure.
So they are aggressively penalizing dwell time, empty miles, and, poor appointments.
So what does this mean for you if you are managing a dock right now? Because if you are, you know exactly what I'm talking about when carriers just sort of ghost your late tenders because your gates are backed up.
Right. So the immediate action you need to take is reducing your dwell times. You have to look specifically at any facilities averaging more than roughly 2 hours of wait time.
2 hours is the magic number, huh?
Pretty much. Because if you do not clear those bottlenecks, carriers will absolutely abandon your freight for better performing facilities. And honestly, that happens no matter what rate you offer them.
Wow. Now, let's say you manage to fix your dwell times, right? You still have to deal with geography. Because national averages are kind of lying to us right now. They're masking a lot of regional chaos. Like, we see dry van rejections plateauing around 11 to 12%, mostly from those shallow routing guides we talked about. But how is the regional produce shift skewing the reefer market?
Well, what's fascinating here is the absolute surge in California produce. I mean, Fresno to Chicago spot rates just jumped 62% to over $6,400.
Wait, really? Over $6,000?
Yep. So when those harvests hit, reefer carriers just abandon their regular contracted Midwest routes to chase those massive payouts out west.
Which obviously creates a sudden vacuum of temperature-controlled trucks basically everywhere else.
Precisely. That overarching national relief we see in the data, it completely hides the severe pressure in the West Coast, the borderlands, New Orleans, the Southeast, and definitely the Midwest reefer markets.
So you really need to protect your temperature-controlled freight in any produce-sensitive origin.
Yeah, exactly. And honestly, where your transit windows allow for it, you should shift your non-urgent freight over to intermodal or consolidated options. It is a good way to bypass that truckload volatility entirely.
Got it. So we have carriers fleeing to California and punishing slow facilities because fuel is $5. But even if you manage to navigate all that, there's a massive regulatory wall hitting us next week that could sideline the trucks you actually did manage to secure.
Oh, right. You are talking about the CVSA International Road Check.
Yes, exactly. The DOT Blitz Week happening from May 12th through the 14th.
Yeah, and the focus this year is specifically on cargo securement, which means flatbed and open deck freight are heavily exposed.
Because every strap and chain is just sitting out there.
Completely visible. To an inspector on a flatbed, everything is right there, so they are going to be pulled over constantly.
All right, so to get ahead of that, you need to start your week prioritizing your short late freight, your flatbed, and any road check adjacent moves. Basically, Pre-book your priority freight right now rather than waiting for those inspection windows. Or, for the upcoming Memorial Day compression.
Yeah, and that actually raises an important question to leave you with today. If long-term contract base rates are already climbing rapidly in May just to secure secondary providers, how drastically will you need to overhaul your route guide budgeting before the Q4 peak arrives?
Thank you for listening, and see you next week.